The art of trading is A, recognizing a potential opportunity, and B, accepting that we cannot say for certain what will happen next. In other words, looking for opportunity in a world of uncertainty. Once we've stopped searching for the Holy Grail, and I'll tell you from experience, that is a rite of passage for every trader out there. And the quicker we can get to that acceptance, the better, because from there, we must find a trading methodology that suits our personality. In my opinion, the wave principle incorporates many forms of technical analysis. But for me, the overriding benefit is the idea of working with patterns, and then within those patterns, having specific levels and guidelines that allow me to operate trading setups and trading risk management. A few weeks ago, we looked at this chart of dollar Swiss. I highlighted the corrective nature of the price action and the possibility of a triangle having ended. More importantly, we highlighted a key level of 88.20 and what was expected with regard to the potential opportunity. A triangle calls for a swift reversal, and we look for price action to trade above or below the extreme of the pattern depending on the trend. In other words, under this bullish scenario, we had a key level of 88.20 and we had the potential of price action trading above 103.44. That is an example of, I would say, extreme risk to reward with regard to a trading setup, and not something that comes around every day. Those of you who monitor dollar Swiss as a currency pair will know that we didn't bottom at 88.20 and price action took out this key level we were working with for this potential bullish setup. So to go back to the art of trading, we recognized the potential setup, we had a key level to work with, we had expectations of what we wanted to see following the completion of a triangle. On a print below 88.20, that opportunity no longer existed. We have to accept that, sit back and see, do we get another potential opportunity. With the wave B triangle off the table, an alternate account is upgraded to preferred status, and we're watching now at this juncture to see if a flat pattern has completed at 85.52. Another potential opportunity, i.e. a pattern that I recognized, a key level that must hold under this bullish forecast, i.e. a 5-wave rally for purple wave C. And taking a closer look at the price action for blue wave C, the decline from 101.48, we are labeling that 5-wave decline as an ending diagonal. You can see also from this weekly chart that wave C has traveled an equal distance to wave A, a wave relationship we look for within corrective patterns, and we have used that level as support for a number of weeks. As with all patterns within the wave principle, they come with rules and guidelines. The guideline for the ending diagonal suggests a swift and dramatic reversal back to the origin of the pattern and most likely more. Here we can see that the pattern begun at 101.48, so from current price action that's quite a significant move. Just as extreme as the forecast from the triangle a few weeks ago. So to me, it's interesting that both of these scenarios are suggesting a significant reversal in dollar Swiss, even though the pattern we're working with has changed. So that's something that I'm keeping in mind with regard to dollar Swiss. And if we dive a little deeper into the price action up from 85.52, we can see that we can count 5 waves, the form of a leading diagonal. The subsequent price action from 88.06 is corrective in nature, and that is in line with the guidelines of a counter trend move. So even at this lower time frame chart, we do have evidence to keep our focus higher against 85.52. We are once again presented with an extreme reward to risk scenario with regard to the guidelines of pattern expectations. But remember what I said at the start of this video. The art of trading is recognizing when an opportunity presents itself, but more importantly, accepting the risk associated with those opportunities. Whatever your trading methodology, things change. And being static is one thing we must certainly not be when trading. You can see from this example that the wave principle is anything but static, and we are always on the lookout for the next opportunity. Dollar Swiss is certainly a pair I will be keeping a close eye on for the coming weeks. My name is Michael Madden. I hope you found this video helpful. Thank you for watching.